What's up, you guys? Welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Before we get into today's video, go down, leave us a like. Today's video topic is going to be all about margin trading. I'm not going to go into every little detail, and you'll see why near the end, but I'm just going to try to simplify margin trading, what it is, what are the benefits, and what are the drawbacks. Let's get into it. So margin trading, in a nutshell, is basically doubling the amount of money that you can use to invest in a stock by using credit, by using leverage, money that's not yours. Basically, you're borrowing money that you don't have in cash to purchase more shares than you would be able to. But how does this all work? So let's just start off with a little example. Let's say that you invested $1,000 into a specific stock, and let's say the value of that turns into $1,100. That's a normal trade. Then you sell. That's a normal trade where you make $100. But if you would have margin traded that, you would have put $1,000 cash into that stock, $1,000 leverage, $1,000 margin, and you would have bought twice the amount of shares. So now, instead of your value being $1,100, your value would be $2,200. Of course, you've got to pay back that $1,000 leverage, but you're still left with double the amount of profit that you would have, $200 instead of $100. This is great if you're low on cash and you see a great opportunity. But investors, beware. Margin trading sounds beautiful because it can be. You can make a ton of more money, literally double the amount of money that you would have when a stock goes up in price. However, when the stock goes down, you'll see here real soon, you can lose the farm. So if the stock drops, you're pretty much screwed. Let's go back to our last example, where you buy $2,000 worth of stock, $1,000 of it being your own cash, and another $1,000 being leverage. And let's say the stock drops 10%, just like it rose 10% before, this time it's dropping 10%. So obviously you'd lose the $100 on your cash investment. That would be a normal loss. However, this time there's a whole new element, that leverage. You're losing another $100, but it might not sound that bad. But here's the deal. You're losing that $100 on money that you have, and you're also losing $100 on money you never even had in the first place, which puts you in debt. You now owe an extra $100 to whatever brokerage you're doing this with. Even the best traders can get arrogant and get sucked into margin trading, and it's a shame because once your money starts dwindling and the stock price is going down, your debt can actually start accruing interest very quickly, and you're losing money on the stock, on your cash, so you're losing money, and now you're owing money, and it's just a never-ending pile of just stress, and this is where investors can this can lead to suicides. Guys, if you're still like, oh my gosh, I'm gonna margin trade, I can make so much money, I know a stock that's gonna go up, like this is amazing, I can make double the profits and I don't have a lot of money, I would recommend going to watch Financial Education. He's done a few videos where he basically maps out his financial life and his net worth growth throughout the years ever since he was 18. And there's portions in these videos where he talks about when he got sucked into margin trading. This is a very successful investor who lost a boatload of money on margin trading. And I think that before you even think about getting into margin trading, you should consult these videos. I'll put the links in the description. The only time you should ever even have an inkling of consideration for margin trading is if you're very experienced in the market, you see great opportunity in the stock, and most importantly, you have plenty of cash to cover the worst case scenario. However, even then, I personally believe, along with a boatload of others, that if you have the cash to recover your losses, then you shouldn't even be margin trading in the first place. You should just be investing in the stock like normal and taking your profits and losses like normal. You can still make a lot of money in the short and long term in the market doing it this way. This is how people build wealth, not through margin trading. It almost always collapses in the long term. So just don't do it. Guys, that about wraps up this video from Business Buzz. I hope that at least somebody out there, I helped save them from making a terrible decision at some point in their life. Every investor will probably see this opportunity somewhere. I mean, even on Robinhood, if you've seen Robinhood Gold, that's margin trading. So anyway, guys, hope you guys enjoyed this video. Hope you took something of value. If you did, please go down, hit that like button. Please subscribe to our channel. Comment down below what you want to see in the next videos, and I'll see you next time.